Biotech stocks are very special and different from the rest, and that's where we can gain advantage and find good opportunities. Do you want to discover some of their secrets? Let's take advantage of the weekly review of the best stocks to learn about them. Stay tuned, because we are starting the taxi. Welcome to Taxi Biotech, a show to keep up with last news and updates from the world of biotechnology and to learn about its impact on the stock market. The stock data I present here is just a reflection of how companies or the clinical trials are progressing and does not constitute any investment recommendation. This is purely for entertainment. This week has been a bit unusual. First, let's take a look at the most interesting stock of the week, with gains that could have been easily achieved. We'll also take away lessons that can be useful for a lifetime. Plus, I quickly go over the biggest gainers of the week, so you can see how biotech stocks in the Nasdaq sometimes behave almost like meme coins. As always, I'll leave a summary at the end. Let's get started. On Monday, Springworks surprised everyone with a 50% surge. Rumors of a possible acquisition started circulating, and by the end of the day, Merck confirmed it. Springworks is a solid company. I already mentioned it in the first tax reports I did this past January, so subscribe to avoid missing these updates. In the report, we could see that one of the key upcoming dates was the end of February, when they were set to receive an approval or reaction for a new molecule. Looking at the diagram here, we can see that they consistently meet their objectives. They have a strong pipeline and show great resilience against negative impacts due to their revenue, collaborations and robust pipeline. Now we have no idea what kind of offer Merck will make, but those who took advantage of my report, congratulations on that, 70%. Another interesting stock this week was ANAPTYS Bio with a 72% gain. Could we have caught it? Absolutely yes. Take a look. They published a press release stating that the next day they would hold a conference to announce their phase 2 results. One of the key lessons from these videos is that when companies schedule a conference to reveal results, the odds are higher that they will be positive. On Twitter, I have already pointed out that their negative results in December, here, these negative results in December, came as a surprise, with the stock dropping a third. However, this time they were announcing a conference, meaning there would be no surprises, which suggested they were expecting good results. And that's exactly what happened here. The stock skyrocketed 72%. Even if you didn't catch in the first few hours, anyone who got in could have easily made at least 30%. Later, they officially report strong results and the stock skyrocketed. Obviously, this pattern is not investment advice. Everything is based on probabilities, you know. Another stock that had a strong start but later lost momentum, NKGN Biotech. They announced that they received fast track designation for Alzheimer's treatment. The next day, they published their phase 1 results. I have a detailed thread on Twitter analyzing the phase 1 data. You can find the link in the comments below, as always. My summary? Looking at the individual data tables here, it's clear that the treatment does not have a significant effect on patients, which aligns with the stock's correction. You already know, science always comes first. Next up, XILIO Therapeutics. They reached a collaboration agreement with AbbVie to develop their masked antibodies. AbbVie invests $52 million, which is actually more than XILIO's entire market cap, causing the stock explodes upwards. However, not so fast. Gilead had a similar agreement in March last year for the IL-12 program, with an investment of around the same amount, $75 million. What happened then? The exact same thing. The stock surged to similar levels before correcting. Looking at the last poster data, where they describe the intermediate efficacy of this type of antibody, we see here that they achieve 27% response rate in patients who have very limited treatment options. That's not groundbreaking, but it's not bad either. There were very few patients in the study, but some show significant tumor reduction. Plus AbbVie investing in the program, it's likely they have more data that gives them confidence in it. So far we don't know much about the IL-12 program, but from this point on it looks like the stock might consolidate above $1. Personal opinion, not investment advice, of course. Hey, but seriously, who else brings to you this data on YouTube? Drop a like, come on! And almost wrapping up, EDESA Biotech. EDESA secured a modest private investment, which investors took very positive. A 15 million injection that boosts the stock by 130% in a single day. How could we determine the price limits for these stocks? Well, no one has a crystal ball, but we can see a strong resistance here, precisely where the stock price stopped. Also, if investors inject 15 million here, and the company was already trading at a market cap of more than 15 million, then this price level seems reasonable. That's why you have to stay alert and act fast on these new updates. In just one day, you are either in or out. And finally, just two warnings. We've seen in previous videos how a big announcement, like receiving fast track designations, can trigger huge stock jumps, like with NEKTAR here. But we've also seen companies using this announcement as a setup to immediately dilute shares, or even worse, release negative trial results right after the fast track news. So be careful with this type of announcement. If you enter these stocks, watch their press release very closely and keep tight stop losses. And another warning here, RECURSION is breaking out from this painful range here, trying to reach previous highs, but with no clear news behind it. The only update came from February 5th, when they presented safety data and talked about lesion reduction, but there were the same results they already presented in September. So some people are considering shorting it. However, here's my second warning: be careful shorting biotech stocks that already have high short interest. Biotech stocks are prone to short squeeze when their short interest exceeds 20%, and RECURSION is already close to 20%. Be careful here. Now let's review the meme stocks, because biotech stocks sometimes turns into pure memes. The best biotech stock of the week follow this pattern. Let's go. Dominari skyrocketed 270% because Trump sons joined their advisory board. Moleculin jumped because the FDA fast-tracked their clinical trial. Look at the chart here, while the speculative chart. Viracta announced on February 5th that they were closing down, yet the stock rallied from the depths of the hell to the first floor of the hell. OMGA is also on the rise, without any news, but with a large number of short positions being closed, while CNS is rising on neutral news. The stock is up, but with a very awful chart, dumping today in the pre-market. As you can see, it's crucial to distinguish between meme stocks and real science. And now let's review our learnings from these kind of videos. Now, over the takeaways from this week. Biotech stocks always bring unimaginable surprises, like the Trump sons news, and there are plenty of meme stocks. But if we want something more serious, we saw today with Springworks that dollar cost averaging in stocks with upcoming results and solid scientific data can be a good idea. However, sometimes these become sell the news events, so caution is needed on the actual announcement day. We also learned that when a company announces a conference to present data, it can be a strong indicator, but only if we check its historical performance. Science always prevails over charts and technical analysis, of course. And private capital investing in a company can feel like a strong signal of confidence from insiders with privileged information. And the final thoughts: always watch out for companies with a very small float, as they can behave like meme stocks. Short positions matter. Stocks heavily shorted can suddenly spike for no clear reason. Shorting these stocks is tempting but extremely risky. And with that, we end this high-risk journey with valuable lessons about unlocking profits in biotech stocks. Goodbye!